What is up, guys? Today I want to talk to you about Indie Semiconductor stock, which is currently trading under THBR because it's a pre-merger SPAC. They make semiconductors for the auto tech industry, and I think that this is going to be an industry that grows quite a bit over the next 10 years as cars become more technologically advanced. So if you want to find out why I'm buying shares of Indie Semiconductor today, please watch the video. And if you get any value from the video, please comment your thoughts, like, subscribe. I'd be greatly appreciated. The community is growing here, so every subscriber helps, and I love to chat with you guys. All right, so let's jump into the video. What's up, guys? Today I'm going to be talking about Indie Semiconductor, which is a SPAC that is pre-merger, trading under the ticker THBR. So just a little note on recent volatility. I have positions in Clove and Lots still, Clover Health and Car Lots, and I'm getting absolutely fleeced on these positions. I think I'm down 20% on Lots and 30% on Clover, right? So I just try not to look at these positions and how much money I'm down currently. I just want to keep my emotions in check and rely on my prior DD with these stocks and think about the long-term prospects that both these companies have. And then another thing I just wanted to say is, as always, if you'd like to interact with me about any investment, about any idea in real time, please follow me on Twitter at 10xbaggers, so we can discuss at pretty much any time. I'm pretty good about responding to anybody who tweets at me pretty quickly. Okay, so let's talk about the stock today, which is Indie Semiconductor. It's a company that produces semiconductors for the booming auto tech industry. The company estimates that the current total addressable market for semiconductors in the auto industry is $33 billion and will grow to $52 billion by 2025. It's a fact that some of the car companies that are being pumped up by the recent electric vehicle craze are not going to make it. One of the safest ways to play the electric vehicle boom is to buy stocks that are further along the supply chain. Semiconductors are in high demand in general, and I think Indie stands to profit greatly on this demand and looming trends in the auto industry. The cost of semiconductors is constantly going up due to demand, and as cars become more advanced technologically, this demand and this trend for semiconductors isn't going to slow down anytime soon. Indie estimates that semiconductors for the auto tech industry could yield a cost of $4,000 per vehicle in the future. Indie has already partnered with some of the leading manufacturers of cars, including Magna, which recently gained exposure as being the manufacturing partner of Fisker. Indie makes semiconductors that will be involved in all parts of future car manufacturing, such as user interface, electrification, connected car, and autonomous driving. One of the things that makes Indie an enticing growth investment is that it's currently backlogged on $2 billion worth of products. This means that 60% of their future projected revenue is already guaranteed or as close to being guaranteed as possible. This company is putting forward some ridiculous growth prospects and estimates their compound annual growth rate to be 85% into 2025. That's a seriously impressive feat if they can achieve it, and the stock price will reflect that. Indie Semiconductor is working on diversifying their revenue streams and could be thought of as a potential NVIDIA of the auto tech industry. Right now, the company is not profitable but expects to be profitable by 2023, and they're projecting profitability at scale in a big way. Their revenue estimates for 2025 state that they expect to earn $500 million in sales, and from that amount of sales turn a profit of $298 million, which would mean that they make 60% on margins. This would be crazy good numbers for the company as the cost of semiconductors increase and they expand their product offerings as new tech becomes available in every car. I don't see why Indie won't eventually be producing $1 billion in profit at some point in the future. After the merger, Indie will have a market cap of around 1.4 billion, which is relatively reasonable considering the future growth prospects of this company. That they produce a product that's in extremely high demand that the current market can't even keep up with. And there's going to only be a trend of more semiconductors needed for every car. I'm in a small position, or actually, sorry, I'm not. I'm adding heavily to my position in THBR right now, and I just think the market opportunity is there for Indie to seize. I'm buying as much as I can under 11. Obviously, if they got caught up in another electric vehicle boom, like the electric vehicle stocks are doubling and tripling in a few days, obviously I'm going to take profits on a situation like that. But other than that, I'm into Indie Semiconductor for the long term. I think they're a very strong growth opportunity. They have great long-term prospects, and they seem to have a management team that has a long-term vision to achieve these prospects. So I'll keep an eye. I will keep on top of how the management team is executing, and Indie Semiconductor could very well become my next 10-bagger investment from a valuation of 1.4 billion. Obviously, I'll keep you guys updated with any earnings updates and stuff like that on the stock. So THBR or Indie Semiconductor checks a lot of boxes for me. It's in an industry with an immense total addressable market. They're rapidly growing revenue. They will have diversified revenue streams, and they could very well develop a strong moat in the auto tech semiconductor space. I'll be adding to this stock on any weakness. Alright guys, so that's my video on THBR, Indie Semi. Let me know what you guys think. Is it a buy? Is there market opportunity as big as they are saying? Please comment, like, subscribe, and let's keep the discussion going. All the best and happy bagging, folks.